In the late 1990s, a customer of the American financial firm Northwestern Mutual wanted to buy life insurance policies for his newborn daughter. He sent in the application, made the first payment, but the company had to delay issuing the policy because the customer's doctor hadn't yet sent in the paperwork. One of those routine delays that happens. When the company's representative called the father to explain the delay, the father told her that it was too late. Tragically, the little girl had died that morning of sudden infant death syndrome. After checking with her immediate line manager, the representative decided that the company should honour the policy so long as the medical records from the doctor would have meant that the child had qualified. Nobody bothered to ask the chief executive of Northwestern Mutual because as far as they were concerned, it was clear what the decision should be. For all that it was the exact opposite of what most similar companies would have done in the exact same circumstances. The chief executive, Jim Erickson, didn't get to hear about it until much later, and he said he was proudest of the fact that nobody had felt the need to ask him before doing what he considered to be the right thing. Now, that's a story I've told before. It's an example of a financial institution that has a base of values. In this case, the values were childishly simple. Always do right by the customer. But it turns out that universal values, childishly simple as they may be, if they are consistently applied in practice, can turn out to be immensely powerful. Well, in the UK right now, people are more angrily discussing whether financial institutions should have values, and the case in point could not be more different from the story that I just told you. Nigel Farage, a man who is loved by some, deeply loathed by others, the man who was an architect of Brexit, a friend of Donald J. Trump, the host of the most successful flagship show for the highly partisan GB News channel, was recently told that his bank account was being closed. His bank was Coutts, a private bank for the rich, owned by the larger banking group NatWest. Initially, he wasn't given an explanation as to why this action was being taken. A bad habit that the bank seems to have picked up from social media companies who are quite used to doing such things. He reached the conclusion that it was all politically motivated, in line with a number of other companies that have similarly withdrawn services from customers in recent days, whose views they decided were problematic. Then a story was apparently leaked by the bank to the BBC that it hadn't been anything to do with Farage's politics or anything like that, but because he fell below the wealth criteria that the bank applied. Ho ho, some of the commentators sniggered. Nigel not rich enough to qualify. Well, that didn't last long. A Freedom of Information request put in by Farage yielded a rather extensive and remarkable 40-page document, which was extracted from the bank's Wealth Reputational Risk Committee, and it was published in full by the Daily Telegraph on its website. As you might expect in this day and age, these things never remain secret for long. And it was basically a dossier of all the things about Farage that the compiler of the report considered to be negative, and hence, in their mind at least, a reputational risk to the bank. His publicly stated views, it said, were at odds with Coutts' position as an inclusive organisation. And he said, he is seen as xenophobic and racist. He is considered by many to be a disingenuous grifter. But the document also noted he had only ever been polite and professional in dealing with the bank's own staff, and his views and activities were all entirely legal. That wasn't enough in the end, it seemed, and the decision was made that he should be, quote, exited. Given that that was the real reason why he was ousted, How did the BBC end up reporting that it was because he didn't have enough money to qualify anymore? Well, the answer to that question is unknown at the point of making this video, although it has been observed that the BBC journalist who wrote that story attended a charity dinner the day before that he broke it, and at that dinner he was sat next to none other than Dame Alison Rose, who happened to be the chief executive of the NatWest Bank. Does that prove that she must have been the one who briefed him on that occasion? Well, no, but it's a pretty extraordinary coincidence. If it didn't happen then, I think it's fair to suggest that how it actually happened should be rather quickly fully disclosed. It also implicates Rose directly, something that could lead to real pressure on her position as chief executive, depending on what happens next. Rose issued a public apology to Nigel Farage for the contents of the dossier, saying that the language used about him was unacceptable and, according to her, not reflective of the bank's official position. What value such an apology? Well, what she didn't do was to offer to reinstate his account with Coutts. She offered a NatWest account, but why not reinstate him? I mean, it's a rather obvious and open question. Unsurprisingly, Nigel Farage is committed to finding out whatever else he can through the same freedom of information avenues to see just whether or not Rose was directly involved in the decision making. The problem with discussing this case is that Nigel Farage is, of course, as already referenced, a deeply polarising figure, and people do struggle in the modern age with removing their likes or dislikes of an individual from the principle at stake. Because look, even if you hate Farage, it could easily have gone the other way. A bank exclusively for the wealthy, remember. They could easily have decided that their values actually excluded anyone who reads The Guardian and has generally left-wing views. So the principle should be freed from the individual we're discussing. Should a financial organisation seek to have values? Well, sure, the example I gave at the start is an excellent example of why it should. Personally, I would rather that my money would be in the hands of people with the values of integrity and honesty and doing right by the customer. Should companies go further than that? Sure, that's down to them. Lots of companies have been, for instance, actively involved in the communities where they're based, have supported education, health, other social initiatives. It's good for their reputation, it's beneficial to the communities that, remember, they're a part of, they're not separate to. And yes, I think they should be engaged in things like the environmental impact of their own investment choices as well. These are all things that are not so far from the Northwestern Mutual model of values. Do the right thing by people. And by that, we're talking about relatively universal values. Treat your customers' employees well. Don't pollute their neighbourhood or indeed the planet that we all live on. If you have some resource, i.e. you've been successful, well, give something back in recognition of all the things that helped you to get to that success. These are such universal values. You will find many businesses going all the way back to the beginning with firms such as Cadbury, which practiced them and normalised them up to a point. Where a number of modern corporations have gone astray, and where Coutts and NatWest have fallen pretty grievously, is straying away from universal values, things that would unite all people, to partisan ones. Because in the modern polarised political reality that we live in, there are some values that only one side of the political divide signs up to. But they insist that they too are universal values, which means that if you don't agree with them exactly as they describe, then that makes you a de facto pariah outside of society. And so you end up with the absurdity on its face of organisations saying they're going to exclude people, and it can be customers, it can be employees, because they don't align with their commitment to diversity. Do those people actually know the definition of that word? Businesses used to wear their political neutrality as an asset. It meant their employees could have all sorts of political opinions, as could their customers. They could still unite them around a front based on their universal shared humanity. Giving a customer excellent service doesn't require you to have left-wing politics or right-wing politics, or indeed to agree with the politics of the colleague standing next to you. Making sure your products are not harmful to society might tread into more grey areas, but it's still perfectly navigable on that basis. But at some point, valuable and important commitments on equal opportunities got turned into a weird view of diversity that focuses on group identity and started to value some group identities higher than others. And so you have the expulsion of people who think differently in the name of said diversity. It's not surprising to learn that Coutts updated its rules relating to clients in the wake of the death of George Floyd in the United States and the rise of Black Lives Matter. At that point, the bank commissioned an equality report, which wasn't in itself an unreasonable thing to do at that time, given what was happening. But the content of that report was what took it into the arena of judging customers by their stated values. And in 2021, the NatWest Group updated its terms and conditions to state that it could close an account in cases of racial or discriminatory conduct by the account holder. That then raises the question, who decides, and of course on what basis? If it had just been about protecting their own staff from abusive behaviour from customers on the grounds of discrimination, absolutely nobody would have argued with that. But in Farage's case, the how seemed to involve drawing up a dossier, trawling through all his public statements and controversies in a form that has been compared to the sort of monitoring carried out by the East German Stasi. Now, don't get me wrong, a company is entirely within its rights, should it wish, to limit its customer base by targeting a niche group. Ben & Jerry's can sell ice cream marketed to left-wing hippies if that's what they think is going to work for them. Sure. Mostly, of course, that's a question of marketing, not actual exclusion. And there are some basic services that are essential to life. Energy providers, telecoms providers, internet, water providers, home builders, and yes, banking and financial services. These should not be in the business of judging customers based on political opinions or activities or much else besides. That never used to be controversial. It was just a description of normal life. Luckily, I think the UK is still a lot less further down this sort of rabbit hole than is the United States. So the response to the Nigel Farage revelations from the government of the day was remarkably rapid and very clear. This was not acceptable conduct by the bank, it said. People should not be denied services because of their political public statements, whether you like them or loathe them. The Treasury quickly drew up principles to shut such activity down. Account closures would be required to provide accurate information as to the reason, for instance, and they would have to give a much longer notice period to give times for a proper appeal. The Times newspaper quoted several major shareholders of NatWest who were disturbed by what they had seen, described it as a slippery slope, and who were intending to discuss rather seriously those concerns with the bank. And that's before you even notice the fact that the government itself is a 39% shareholder in NatWest, a legacy of the bank bailouts during the 2008 financial crisis. The consequence of all of this is to have given the whole idea of values-driven businesses a bad name. And that is something that I personally regret, because I've spent a lot of time in my earlier life talking to many businesses about why it's actually a good thing for business and for society. The thing we learn is how there's no idea so good that it can't be distorted over time into a parody of itself. From an important principle about how you take businesses who often wielded power with too little accountability into being voluntarily transparent about what they did, to one where they start to police the behaviours of their customers. That is actually quite a journey. The first one's about holding powerful corporations to account. The other, apparently, being about powerful corporations appointing themselves as policemen over how we live our lives. Funny how the powerful always manage to make the problem about what the other guy does, never about themselves. Thanks for watching this video. If you liked it, please share with anyone else you think would also enjoy it. Word of mouth is really important to us. And if you've not subscribed yet, what are you waiting for? As the saying goes, that subscribe button won't smash itself.